In this video, I will explain from my experience as a corporate solicitor everything that you need to know about share capital, including the types of share capital and the differences between the nominal value and the share premium. If you are the owner of a UK company and have aspirations of, for example, either selling your company in the future or raising investments, understanding these concepts will avoid you looking like you don't really know what you're offering and therefore minimize the risk of you jeopardizing your sale or raising of investments due to not knowing something that is important. Further, towards the end of this video, I will also share a little known secret about why your limited company is referred to it as limited and how that concept is connected to the idea of the nominal value of your shares. Fantastic, let's get started. So in this video, we'll go over three main things. First, we'll discuss what is share capital. Second, we'll discuss the different types of share capital. And lastly, we'll discuss the differences between the nominal value and the share premium when it comes to shares. Okay, let's start with what is share capital. So share capital is the total nominal value of all the shares in your company and that your company has created. Think of your company as a pizza and you slice it into, for example, 16 different slices, 16 different shares. Each share or each slice has a fixed legal value, let's call it a nominal value of £1 per slice. Once you put all the shares together, that's the company's share capital, namely in this case, the £16. So this is very different from market value. Your company could be worth millions of pounds, whilst the share capital stays the same as from incorporation. We'll discuss that later on in this video when it comes to the differences between nominal value and the share premium. Fantastic. Let's move on to chapter 2, which is what are the different types of share capital. So there are two main types that you need to know. First is the authorized share capital. So this is more of an older thing for companies that were incorporated before October 2009, and this was the maximum shares a company could create according to their articles of association. Modern companies formed after October 2009 don't have this limit anymore. If you do have this limit in your articles of association, then you'll want to amend your articles if you wish to have a greater amount of share capital than that is specified in your articles of association. The second is the issued share capital, and this is the most important, is the total nominal value of all the shares that have actually been created or issued for that company. So, for example, if you've issued or created 100 shares of £1 per share, then the issued share capital is £100. So 100 shares times £1, £100. To give you an example of the difference between the authorized share capital and the issued share capital, let's think of going to an all-you-can-eat sushi restaurant. So theoretically there, you would be authorized, allowed to, in this case, eat as much sushi as you wish. Now, the issued share capital instead is the amount of sushi that you've actually eaten whilst at that restaurant. Now, before we discuss the nominal value versus the share premium, make sure to email me if looking for professional legal advice. I'd be happy to offer you a free legal advice call. And with our calls, there are no charges, no obligations, and there's going to be no nonsense. Contact me now at info@zoppi.co.uk. Fantastic. Let's move on to chapter 3, the difference between the nominal value and the share premium. So this is where people get confused. Let me simplify it. When it comes to the nominal value, it's a fixed legal minimum price per share that a shareholder must pay on incorporation of the company, or if they don't pay it on incorporation, it's seen as unpaid and will need to be paid when the time comes. Really, it's a made-up concept, and this is the minimum a shareholder must pay to the company to be able to have that share. So, for example, it's either typically paid on incorporation, or if the company goes insolvent, then that shareholder who still owes that money to the company will need to pay that money to the company then, and then it's going to be used to, for example, pay off debtors. The nominal value is typically £1 per share. It can also be as low as 1 pence per share. Now, anything paid above that nominal value is going to be recognized as a share premium. The premium or the markup that is paid above the base minimum nominal value. Now, to make sense of why this distinction exists, we must first understand why your company is referred to as a limited company, an LTD. Now, your company is referred to as a limited company because the shareholders' liability is limited to the nominal value of their shares. So, for example, if you created a new company today and you subscribed or bought 100 shares of nominal value of £1 per share, your liability is limited, aka capped, to £100. That's the case even if the company owes, let's say, £10,000 to a supplier. Now, assuming that you haven't given any personal guarantees. So that's why we have limited companies and nominal values. They work hand in hand. The nominal value caps your liability towards third parties outside of your limited company, and that's why we've got limited liability. Now, the reason for that is because we want to encourage people to start businesses because businesses are good for the economy. Now, to encourage people to take the risk of starting a business and setting up a company, the government introduced the concept of a limited company, which, as we discussed, limits the liability of the founding shareholders, gives them certainty over how much money they're going to lose if things go south. So that's how share capital works and why your company is referred to as a limited company. If you've got any questions, feel free to put them in the comments below. If you enjoyed this video, you thought it was useful, please leave a thumbs up. If you're interested in shares and how to be more creative with them and create different classes of shares, make sure to watch this video right here. Thank you for watching.